Good morning. This is Ahmed Saleh, and today we are going to talk about how to approach the stock market. Are you going to approach it as an investor or as a trader? There is a big difference between both. So let's look at both of them and see what are these differences. So as an investor, your main objective is to be in line with the market returns. What do we mean by market returns? We mean the S&P 500. S&P 500 is giving us about 10% over several years. And you as an investor, you want to be in line with this market returns. You are a partner in the company if you are an investor. So you are partner with Elon Musk, with Mark Zuckerberg, with Jeff Bezos in Amazon. So you get the chance to be partner in a very successful business. Okay. And of course, if you are a partner, you don't buy and sell. You stick to your investment. You are investing for the long term. And you can also invest periodically. What do I mean by periodically? You invest 5% of your salary, for example. Every time you're getting your salary, you invest 5% of it into the different stocks. And this is for the long term. You reinvest the dividend. You care about the dividend and you reinvest it, you buy shares with it. You just make like one trade every month just to buy the stocks, and that's it, and you forget about it. So it's a few trades per month, per year. You are risk averse, you're not taking risk. And sometimes you are doing it as automatic. You just give direction to your broker, and the broker will automatically buy if there is money in your account. So that's the investor. What about the trader? The trader, the objective of the trader is to beat the market returns. At least to do 1.5 or 2 times as the market returns. So if the S&P is giving us 10% year on year on average, then the trader objective is to make 15 to 20% per year. That's why many people want to be a trader. But let's be careful. 80% of the traders are losing money. 80%, can you believe it? 80% of people who are trying to time the market are losing money. Why? Because there is a complete science and art behind the trading. And you have to learn how to be a trader. And many people go and think it is just very easy to buy and sell stocks, and they will lose all their money, or big chunk of it. So the trader is normally, he doesn't care about the company, if the company is doing good or bad. His only objective is to make profit, regardless of the company. He can be there for 1 day, 2 days, 3 days, 1 week, 1 month, and get out. He invests a big lump sum, $10,000, $20,000. Okay, just one big lump sum. And the traders normally don't care about dividend. Dividend is like 3%, 5%. We don't care about that. We want to achieve the maximum that we can on our capital appreciation. That's our objective. The trader buys and sells frequently. They can buy and sell several times during the day or several times during the week. And they are taking high risks. They are what we call an active investor. They take action every day or every week in the market. And they need training. Without training, they lose money. And it also takes time. Okay, so you invest time and you invest effort to get 1.5, 2 times the market return. So there is a big difference, as you can see, between both. Sometimes they are in opposite direction. So for example, if the stock went down, the investor will buy, the trader will sell. You see the difference? And one more important thing is that you can be combination of both. Yes, you can be both. So some people can be 100% investor or 100% trader, but some people can be 70% investor, 30% trader, and sometimes it's 70% trader, 30% investor. Sometimes it's 50-50. Okay, so you can be both, but you have to define and you have to separate the accounts. You have to separate the accounts between the investing and the trader, and you can do this very easily in IBKR and E-Trade. They give you the option to have several accounts. So you have one account as an investor, one account as a trader, and you can have the investment that stays there for long term and the trading account that you trade with it. Okay, so you can be both. You can be an investor only or a trader only? The important thing is that you decide, who are you? Are you an investor? Are you a trader? Or are you a combination of both? And if it's a combination of both, how much? Is it 50-50, 70-30, 30-70? This is very important to know and to decide on before you go into the stock market. Thank you very much.